While we're talking about some earnings candidates, let's decode the numbers of Black Box. And we have the pleasure of having the management in the studio with us. Mr. Sanjeev Verma, the Executive Director and CEO of Black Box, joining us on the show. Mr. Verma, hi, good afternoon, and thanks for your time. You know, it's largely been an inline set of numbers for you in Q4. Margins have also more or less stayed stable. Talk to us about what is the kind of visibility that you have for the top line as well as your margins as we head into FY27.
Okay, I think we do not have a quantitative guidance yet, but from overall margin perspective, first, of course, we have always said we want to be at 10%. We are exiting this year at 9%. Q4 was better than that. So we expect our 27 to be tracking at about 10%. From a growth perspective, of course, I think we have had a very good year. From a booking standpoint, we crossed a milestone of $1 billion worth of booking. Very, very strong backlog. So expecting reasonable growth, high teens, 15-20% would be reasonable for us to see in fiscal 27 from a growth perspective organically.
So the upper band of that guidance, 20%, is something that we should be working with?
That's what we are focusing on at this time.
Okay, so that sounds good. And let's talk about the order book and the order backlog. I believe you have a backlog of $792 million. And basis the kind of geopolitical disruptions that we've seen in FY26, a lot of your order book had spilled over into FY27. So what's the execution timeline over here, and how much of your order book in terms of new wins as well as what's spending from the previous year is executable within FY27 itself?
Okay, so I think our order book is a composition of our managed services, annuity, and projects. Projects clearly are long-term and an average between 2 and 3 years' time. So at a beginning, I mean, ballpark, between 50 and 60% of the backlog usually flows back into the year, and the balance goes back into the next fiscal year. So that's one. From a revenue standpoint, we have a backlog which is fairly strong, 60% more than previous year, so that should flow in reasonably well. And more importantly, we're looking at this current year, which is fiscal 27, to have a very robust booking as well, which will also flow into our revenues for this year. So a combination of a backlog that we have and a robust booking that we expect in the starting Q1 and going beyond tracks us to where we want to be from a revenue standpoint of growth, tracking at 15-20%, and of course, getting to our margin goal of 10%. So that's how it will play out.
Okay, and very recently, Mr. Verma, you've completed the acquisition of the Brazilian company. And from the management commentary, we gather that 500 crores of annualized revenue is what you're expecting to see. By when can we see these operating benefits or the synergies to start kicking in from this acquisition?
So from a revenue standpoint, we'll start kicking in from the month of May. We announced it's the first May acquisition. We'll get about 11 months of that in the current year. From a synergy standpoint, we expect our LATAM business in Brazil and the acquisition to come together and become synergistic in 90 odd days. So we will get a substantial portion of 450 crores or so at this time from the acquisition. But more importantly, the synergies of coming together would bring us better yield in 27 and 28. So starting very soon, we'll see it in this quarter itself. But more importantly, being a large network integrator, we expect growth in the next year or two from a combined business coming together.
Okay, that's on the top line. Talk to us about what the EBITDA margin contribution is going to be from this acquisition. If I'm not wrong, this number you're looking at is in the range of around 9%?
Yes, I think it will be accretive at or about the same target. Our goal is to see synergistically we can take it to 10. So that's what the focus is.
And which is more or less in line with the quarterly EBITDA margin that we've also seen this quarter.
Exactly.
Okay, so that looks good. And let's talk about the opportunities within the businesses that you operate in. You've got AI-driven data centers and hyperscalers. Going ahead in the next, let's say, 2 to 3 years or in the medium term, what is the business mix going to look like between both of these segments?
I think one is dependent on the other. So AI infrastructure is largely, it feeds into the hyperscale data centers. And of course, all of the infrastructure that we see today worldwide will transform into AI infrastructure, be it airports, be it transportation and stuff like that. So I think it's fairly synergistic. From fiscal 27 onwards, we expect a substantial contribution, close to 20% or more, coming in from our AI-led infrastructure and hyperscale infrastructure, right, from that perspective. There will also be a pull-through of network integration, refresh into our healthcare business or our business for a bank. But 20% going not for the 20-25%, AI-led, AI-driven hyperscale is what we expect in fiscal 27 and beyond.
Okay, and I was just looking at your geographical revenue mix. 65% so for you right now comes from US, with India at 7. Talk to us about what growth opportunities are you seeing in both markets, and what role do you see India playing in the overall business? From the 7%, how much can India grow now?
Okay, I'll take the second one first. I think
Sure.
India, the opportunity for India, of course, is massive. I think India usually starts late, but starts in full measure. So I think we have talked about AI for the last couple of years, but the real investment is going to start now. With 1.4 billion people currently underserved from a perspective of infrastructure, specifically hyperscaler, huge potential over the next couple of years' time. And of course, Black Box, as one of the global providers for infrastructure, would gain. US, of course, will remain the largest market. I mean, they're talking about building several 100 gigawatts of infrastructure from that perspective. So it serves fairly well for Black Box to be in these both markets. The consequence of doing better in India, of course, overall, we expect the 7% to go to closer to 10 in a full scale when we go to $2 billion worth of business. So it will improve, but substantially volume-wise, US will still remain far ahead from that perspective.
What's the timeline for this 7 to go to 10?
I think we expect between the next 24 to 36 months.
Okay, so next 2 to 3 years. Okay, so that sounds good. And Mr. Verma, I understand that given how geographically diverse and how spread across the business is, the Middle East impact might not be too much in your biggest core segment, that is the USA business. But when it comes to digital infra, are you on ground seeing any delay in client decision making on the back of this war?
Yeah, clearly Middle East will see some stress with respect to, at the back of this war, with respect to largely about confidence, because this is infrastructure business. Black Box, of course, has a smaller pie overall of 100%. It's fairly small, so we don't expect to see that either in fiscal 27 or beyond getting largely impacted. But clearly, yes, from an investment standpoint, over the last couple of months, and maybe hopefully the next several weeks, it'll possibly ease out. But for now, there is a stress out there, not impacting Black Box fiscal 27 or beyond, but we're keeping a close watch of should we invest more, because it will also have a lot of infrastructure spend in that market, and I think we'll have to track that as well.
Sure, keeping fingers crossed. And lastly, let's talk about the promoter infusion that we've seen very recently, 200 crore rupees infused by the promoter into the company. How should the street be reading into this?
Extremely positive is the word, right? So promoters coming, and so we did a 386 crores of pref, fully subscribed, and the promoter participated more than 50% of that. I think clearly a strong confidence from the investor community, strong confidence from our promoters at this time. And from a management standpoint, of course, we put our heads down to execute at this time. I think we believe the confidence is coming through, and we want to deliver on that in fiscal 27, but more importantly, to our goal for 2 billion over the next 3-4 years' time.
Okay, and lastly, Mr. Verma, before we let you go, AI, cloud, hyperscaler, these are segments that are seeing robust demand globally. In the next 3 to 5 years, where do you see Black Box?
I think the next 3 to 4 years' time is the aha moment for Black Box. When, of course, we expect our revenues to triple from where we are at this time, both organically and, of course, inorganically at this time. Track to margin of 10%, if not better, from where we are, and create long-term shareholder value. That's where I see Black Box.
Sounds good, a triple revenue and 10% EBITDA margin. So that's what we are looking at, viewers. With that, we're completely timed out on this conversation. Mr. Verma, thank you so much for your time, and thanks so much for such a wonderful conversation.
Thank you so much.
Thank you. Okay, viewers, so that was the management of Black Box talking about their ambition in FY27. Seeing the top line growing at about 20% would be a fair ask, with margins around 10%, and they're looking to triple the revenue in the next 3 to 4 years. So looking good when it comes to that guidance. Stock is holding up quite flat as we speak, 0.2% higher for that one. But yes, on that note, viewers, we're completely timed out on this segment. Let's slip into a very short break and more conversations and more about the market on the other side when we return.